And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 15th of June. We're halfway through the month of June. The sun's shining. That's pretty bad all in terms of the way the markets are, though. Hi, Phil. How you doing?
Very well, thank you, Andrew.
Very good. And yeah, look, I'll pick up on that point. It's the macro picture at the moment is holding an awful lot back. Obviously, it's all to do with, a lot of it's to do with rate rises. We saw yesterday that the Fed didn't increase their rates. We see in the UK, Jeremy Hunt says it's the only thing he's got is to raise rates to try and dampen down inflation. I mean, what a bloody idiot. The only thing he's got is he only got one idea, and he's our chancellor. I really do despair sometimes of the way this country is run. He really, I mean, come on, the guy went to Oxford. Surely he's got more than one idea. I mean, rates are not the only thing you can use. And actually, you know, rates were obviously kept low for too long. They shouldn't have been kept there. Actually, if you look back, Mark Carney thought he was very clever. He wasn't quite as clever as he probably thought he was. Andrew Bailey certainly isn't that clever. But Jeremy Hunt's the thickest of the lot. I really do despair sometimes. Actually, it's a really weird global picture because you've also got, of course, you know, actually rates coming down in China, and they're only, you know, they're only like 2.5% in China. The economy's stalled over there. You know, and of course, you know, everyone has a very confusing picture about inflation because energy inflation is actually now deflation. It's going down. It's this core inflation that is causing everybody the problem. Core inflation is, you know, services and that sort of thing. Basically having to pay people a lot of money. Employment is tight because there actually isn't that much unemployment. That's what you've got to try and work out how to change, and that ain't going to be interest rates that changes it. Unfortunately, the government's completely lost the plot. What does that mean? Risk is right off. You might as well go and buy bonds. They'll give you 4.5%. Oh God, they're so tedious. But you know, we've just seen WE Soda, the IPO being pulled. We've seen a few placings in the last week. Jadestone, Entain, boom, they go straight to a discount. So why would anybody take a placing? I mean, we might as well just go off to the beach now, Phil. We could quit this recording, just jump out and go on the beach, yeah?
Well, that'd be a nice thought. At least we can go and spend some money on entertainment. And interesting enough, I was reading it does seem to be what's holding element of what's holding UK inflation up. Is we're all out there weekend spending.
Yeah.
Not retail, but yeah, it is such a mixed picture right now, and it's publicly but it's privately as well.
So for what it's worth,
yeah.
though, my view is I actually think there's a lot of equities out there that look really cheap. The problem is there's just a complete lack of liquidity. Something again we've talked about in this podcast. I must admit, there are one or two I have got my eye on that I am looking, not necessarily in the tech space, to pick up. But I'd probably be a little bit, I mean, you know, we've talked a lot about AI on this podcast. I would be a bit nervous about jumping on the AI bandwagon at this stage. Actually, I'm quite heavily exposed to it anyway. I noticed there was a really good cartoon where somebody said, you know, the stock price of Air India has gone shooting up ever since they shortened it to just AI.
That's very good.
There was a delay there for the laughter. But when you see jokes like that, you think, okay, AI has peaked. Yeah. Anyway, look, there's enough of my ranting. Let's crack on. There's actually quite a lot of news out today, out this week. Actually, quite a lot of news out today, but there's also a lot of news out this week. I mean, actually, probably Phil should just turn the clock back to last Friday because that actually counts in our week. We're a Thursday to Thursday week. Because there was some actually really important news out of Infinity Energy Systems, one of our favorite clients. But they actually announced that somebody had bought a Mistral product. I mean, it's the first time they've actually announced the purchase of a Mistral product. Yes, it was small. Yes, it won't be delivered till first quarter next year. It's going into Canada, but it shows that the show is on the road. Mistral is coming out. What you got to understand about Mistral, right, is it's basically about 40% at least cheaper than the current VS3 version. This makes it highly economic. All right. So the bizarre bit was this, in my view, is phenomenally exciting news because they wouldn't even be saying this if the progress wasn't happening, and yet the stock ended up flat, which is, in my view, absolute madness. We will be hearing quite a lot more, I think, out of Invinity. They're going to have their figures probably not next week, possibly at the end of next week, maybe the week after. I think they'd quite like to get them out, if possible, by the end of next week, purely because there is the International Flow Battery Forum taking place in Prague. There you go. That was a little bit of a tip for a conference. I went to it last year. Fascinating. I'm not going to this year. I think I know everybody who's there anyway. But there'll be lots of jumping up and down on that. But look, I'll tell you what, it's starting to happen. If you can reduce the cost of those batteries by over 40%, you're going to get people buying them. Anyway, that was on Friday. But the news across the battery space, there's been a little bit of news, hasn't there? I mean, there's one that we have said, unfortunately, we didn't think would stay the course, which was AMTE. Unfortunately, this morning they have announced that they've only basically got 4 weeks left. If they can't get funded, it's all over. I don't think they'll be funded in the next 4 weeks. So unfortunately, it's all over for them. One of the things there to bear in mind is, and it's something, again, we've said so many times on this podcast, Phil, is that it costs literally hundreds of millions to build a new battery. This is a big boys game. The good news for Invinity is that actually we've raised them hundreds of millions, and they've been able to spend that money very wisely and actually have built their battery. That's where they're different. AMTE just didn't have that. So I'm afraid it does look like it's all over there. The other one that we had news out this week on the battery space, sorry, I'm doing all the talking, Phil, I apologize, but was Nyobolt, who have this interesting technology using tungsten to improve the efficiency of the battery. Now, they announced, a big announcement this week. Well, I'm not sure really, maybe a few car enthusiasts saw it, because they've basically produced a battery and put it into a Lotus Elise and said you can fast charge it in 6 minutes and it will still have a range of 250 miles or something. I mean, putting one battery into a converted ICE car, whatever you want to call it, combustion engine car, I don't get too excited about that. I think there's a really interesting company here. They're very secretive. They don't give any information out. They won't talk to anyone. How do we find out about this, Phil? Come on, they live, they work, they're based just around where you live, aren't they?
Yeah, it's Nyobolt's a privately owned company, and it's a spin out of Cambridge University's where the technology's originally been developed. And yes, we have indeed tried to have discussions with them, but they're probably right now got their heads down developing their tech. But ain't the lack of try, Andrew.
Yeah, the trouble is, we, as you know, over the years, we've looked at a lot of battery companies that have got some brilliant new tech, and they think they're going to be the answer to everything, the holy grail. And they still run out of money, because just doing one car is very different from mass producing. The question is this a commercial product? I'd love to know. Anybody from Nyobolt listening to this, come on, get in touch with us. If you've really got a good product, don't be embarrassed about it. We're here to help you. Anyway, there's enough on batteries. I also, actually, just finishing on batteries, Gore Street Energy Fund had some numbers today, didn't they, Phil?
Yes, they did. Yeah.
We may as well cover that one off whilst we're on the battery rant.
They had results, which I've not got in front of me, but I did read this morning. From memory, I mean, their overall battery portfolio is up. Their installed base. They've won new capacity market contracts with the government. These are long-term, 15-year contracts. It was profitable. Trying to think of anything else that comes to mind. Really, I think the overall NAV was up for them, Andrew. But look, generally seemed to be okay.
Yeah, no, look, I think it was generally all right. Yeah, I mean, as you say, the NAV went up and that sort of thing. Dividend in line with expectations. One day they may actually go and buy a vanadium flow battery, and they might be pleasantly surprised. And I still have this concern with all of these energy funds that they haven't allowed for the decommissioning of the lithium-ion batteries, which will come along at some stage. But I know they take the view that it doesn't really matter; they'll all be gone by the time that occurs. We'll see.
Yeah.
All right, let's get on to sort of some of the, unless you've got anything you want to talk about, let's get on to some of the figures, etc., which I'm sure you've got all of them covered this week.
Well, I've certainly got some of them covered, and I've just in terms of sort of general things to note. Obviously, we've had Tech Week, London Tech Week in the UK. And I just thought, I mean, I went along to one of the events, and they were covering a bit on quantum computing, on AI inevitably, but also things like computer games. I mean, they're just very much highlighting where we've got core technologies in the UK and companies in the UK, and where we've taken a more strategic approach to investment. But this whole subject of artificial intelligence and data processing and everything, I also went to a legal conference hosted by a law firm, and of course the lawyers. There's all sorts of concerns over what might happen with AI, the implications of it. And on Wednesday, the European Parliament apparently has passed the first draft of its AI Act, which is proposing various laws of hopefully managing to control this technology. But all I would say is to companies out there is like, every company I'm seeing now is mentioning that they've got artificial intelligence. Well, it's like, well, number one, do you? Because it takes an awful lot of tech resource to do all of the modeling and data analysis and put all the algorithms together. And three, and then it's like, well, what are the risks of it involved? So, to be honest, I don't think it's worth mentioning unless it really is real in your business and it is achieving something for you. So that would be one sort of comment from what I've been picking up on this week. But moving on to quickly on to sort of results. One of my one we've covered a lot. We do like Oxford Instruments had their, you saw those, Andrew, had their full year results.
Yeah.
And this is one of our, it's OXIG is the ticker, 1.5 billion market cap. Long established brand in scientific equipment and at the absolute leading edge, and in helping industry and academia to research new technologies, new drugs, new materials. And they have products that go into atomic force microscopes, electron microscopes, cryostats for working at the quantum level with materials. And here we go. So their results, strong. Their orders were up by 21% to 511 million, 14% the constant currency basis. So strong order books. And what I'll tell you what got me is because obviously mixed pictures out there on the economy, but this is an indication of where spend is happening on tech development. And they said this is in terms of their revenues. By end revenue, the advanced materials, so their instrumentation that's being used to develop advanced materials, revenues are up 25% to 140 million. Semiconductors, new semiconductor materials and products up 9% to 122 million, and then life sciences up 10% to 85 million. So strong underlying growth. This is all R&D based spend from their customers. And their profits were up by 20% to 80 million. A really good set of results. Have 100 million pounds in cash. And yeah, I have to say one that I don't cover as an analyst, but certainly is a super company, I think.
Yeah, it is. I agree with
that. Okay. Now on the same sort of vein in a way, this is broad-based, like science-based instrumentation, but in different sectors, and probably not at the high end of science in terms of its customer base. On that is for sure. Is Halma. HLMA is the ticker. It's 9 billion market cap. They have full year results. Now they got end products that are safety systems, things like fire detection systems, fire suppression, elevator safety systems. Explosion protection, so broader, environmental analysis products, and same in medical as well. So broad end markets for Halma. And the full year revenues, they were up 10% organically. This company has been very acquisitive in the past, but it's had years of steady growth. So 10% organic growth, overall sales of 1.85 billion. And the PBT was 291 million, but it was down by 13%. But the reason is that they had a gain on disposal in the prior period. So you've always got to look in the detail to see what's happening. they had return on sales impacted by interest rate rise and supply chain disruption. Well, a lot of companies have seen that. In terms of net debt, they have made acquisitions of the period, and that doubled, but they've got a good, the gearing ratio is 1.38. They've got firepower for acquisitions. They're investing heavily in R&D, which we really do like to see. So, the share price was off a bit this morning. I think we're guiding slightly down. It was slightly down on the margins, which are still high double digit. But under the economic circumstances in the markets, I don't think too bad, and it's a long-term performer, Harmer, like Oxford Instruments.
Yeah, they're actually off 5%, Phil, so they're taking a little bit of a hit, but it's had a tough few years, to be honest. But as you say, it's longer term. It's been a great little performer. Yeah, it's just had a tough few years. So.
Yeah. So there we go. On to but better cover it swiftly, I guess, because we talked about IP Group last week, didn't we? And about tech funds.
We did a little bit, yeah. But I'll tell you what, they had their AGM, didn't they?
Yeah, they did.
Look, I'll tell you what, I've been talking to a lot of people about IP Group, and actually Molten Ventures had their final stage. Let's do them together a little bit, but I'm just going to tell you one. I'll let you talk. I mean, a couple of points on IP and Molten, right? I'll just make, and then you can tell me if I'm wrong or add anything onto it, right? The first thing is IP Group said in their AGM that their intention was to build long-term shareholder value. Well, you know what? I hate to say it. If you go back 20 years, the share price was actually slightly higher than it is today. I think you'll find that is not long-term shareholder value. So number two, they're making a fundamental mistake, I believe, with their share buyback. They keep buying back shares, thinking that that's clever and helping shareholders. But you think about it, if your IP Group, which is a collection of companies, in particular Oxford Nanopore, if you just do a share buyback and nothing else, what you're effectively doing is buying in the portfolio companies. So what they've really been doing is buying more and more Oxford Nanopore, which has just been going down and down and down. But of course, they're not actually physically buying because they're buying IP Group. What they should do is they really wanted to say that, look, we're buying in because our discount is too big, and both of them are trading about a 50% discount. For every share they buy back in IP Group, they should sell a share in Oxford Nanopore. And then they actually really would be trying to narrow the gap between the NAV and the share price. By doing what they're doing, they're not. There's a fundamental flaw there that the board at IP Group have not understood. And I'd also tell you that the central costs for IP Group and Molten Group, they're both about 500 million market cap, are £24 million each or so. So what I said to my clients is the two should merge, IP Group, Molten Ventures, and become Molten IP. And I'll tell you what, I've talked to quite a lot of institutions about it, and they go, God, Andrew, do it. We would love it if they did. So if either of you are listening, go and talk to each other and do a merger, can you please? Because it's actually what your shareholders want.
That's Andrew, that's quite a view, actually. And yeah, I mean, I was looking at the cost between the two of them, and you're right. Yeah, it is that it's at that level, and it would make a lot more sense in the way that they operate. Yeah, and the share buyback thing, it never gets looked at enough, does it? In terms of the reasons and what that actually generates when companies are spending money on share buybacks, but particularly in this case.
I probably stole your thunder there and said what's required.
Well, no, I don't know. You're looking at share buybacks. There's a very interesting angle on what you say there. But I was looking at these operating costs and also the balance sheets as well. I mean, Molten Ventures has got 23 million of cash, but 150 million debt facility. And I'm looking at IP Group gross cash, but IP Group's got gross cash and deposits of 260 million. And it's made a drawdown on debt. I mean, and then also I note on Molten Ventures. I mean, they're both suffering the portfolio values have gone down as well. Yeah,
just merge, guys. Get on and do it. Yeah. Anyway, enough said. Right, come on. Let's move on.
Moving on swiftly. IMARC Group, Cloud Services. IOM's a ticker, 176 million. So they do look. There's a lot of this is like managed services, hybrid cloud, network connectivity, security. Been around for a long time. Been highly acquisitive. These and there's a lot of companies in this space, but this one they had their results, annual results, and their revenues up by 12%. And you've got to look through the various adjustments here because it's been acquisitive, but their profit before tax was down by 30% to 8.5 million on revenue of 115 million. And even though they generated cash from operations of about 34 million, the net debt was only slightly reduced from 41 to 40. And the reason for that was capital expenditure, acquisitions, covering a dividend. So looks like their market has, I mean, it's very much exposed to the UK economy, SMEs and mid-sized businesses. Share prices had a bit of a tougher time. So, at one to probably look at as we are a bit more stable economic situation, I would suggest, but could act as a consolidator in the space as well, because there's lots of these small companies and IMRs around on the market. Anyway, that was that. GB Group.
Oh, GB Group. Can I just say, my mother owns GB Group in her IHT AIM portfolio. Look, she was 91 the other day, GB Group, all right? She does not have time to wait and let yourselves sort it out. Should have got that bid going through at 600p, right? I don't want to be down here at 290p. So my mother says, can you please hurry up and get a bid back on at 600p? Because she can't last long enough for you to sort it out. What were you going to say, Phil?
I'm not that. It was look, they have 4 year results, 720 million market cap. Its revenue was up by 3.7% to 218 million. Its software is used by e-commerce companies around the globe as for people identification when they're registering on e-commerce sites, etc., and prevents fraud. But they've seen tougher microeconomic conditions. They're trying to swallow 2 big acquisitions, and what really stood out for me was on the 2 acquisitions they made last year, an annual impairment review resulted in a non-cash goodwill impairment of 122 million. Well, that's in a pretty, they only acquired these things last year. Anyway, but yes, they need
Phil,
to.
the stock's off 10% at 257, all right?
I know.
We've only got to go back to, what was it? Where was it? About October or something. It was end of September, middle of September, I think it was, when there was all the bid talk and everything. It was over 600p. That's what my mother wants. She's 91. I've got to face her this weekend. She'll be cross. Anyway, moving on.
So they need a bid approach again. An Alpha Financial Software, ALFA, market cap is about 500 million, has confirmed speculation it's been approached about a takeover. So they said that they've received a number of unsolicited offers, the latest of which is at 208p. I'm not sure what it's trading on screen at the moment, but value is at 615 million market cap. So another of our software companies are getting approached.
Yeah. Okay. Did you look at Echo, however you pronounce it?
Oh no, I didn't see that this week, but I know the company. Yeah, there's call center tech, isn't it? Call management tech.
Yeah, they had finals today actually. So again, in front of it's another one my mother owns, and that one's unchanged today. So I'm happy on that one. All right. So that was all fine, all tickety boo there at Eco.
Yeah, no, they've been from memory. The last set of results was pretty good. So they've been, given all the change in e-commerce and in a very different place to where it was in COVID times, having come off as a sector, I think they've done all right. Just a final small one that I spotted, I know of, and this is electronics hardware company Concurrent Technologies. It's been listed on AIM for a good number of years. But this is they design, develop what are called embedded computers. So not your normal off-the-shelf PCs. There's a highly specialized. They'll use standard processors, but they are design all the circuitry around them for highly specialized applications, particularly in the military, computer controls and defense, various defense platforms. but also for data crunching. So things like national security agencies, perhaps, for artificial intelligence, etc. Anyway, they announced that they've won a small contract for 1.3 million pounds to be recognised next year. So I don't think they specified who that was going through. Oh no, here we go. It's with a FTSE 250 company, and it's in defence. So if you do look at the defence sector and invest in it, then maybe take a look at Concurrent Technologies.
Yeah, we had Marks Electrical as well. Apparently they were quite good because everyone's still buying these air fryers. And actually one other final one, which I just got to mention, was the FD of James Cropper left today with immediate effect.
Yeah, I saw
so the
that.
CEO's gone, the FD's gone, and they still haven't got back to us with the bloody train tickets that we bought or to reorganise the visit when we were going to go and visit them before the CEO was fired suddenly. So they're still in my bad books.
All right, too. I'll tell you who else I'll mention. It's definitely not in the sector. Was did you see Fuller's Pubs Brewery?
I did. They're back on the road again, so to speak. It's all a bit of a recovery there after a very tough time. But remember, my house is about 200 yards from their brewery, so and a pint of Fuller's tastes damn good.
Yeah, and I stayed at the Counting House recently, which is owned by Fuller's in the city, and I had a super stay. So good. Well done, them. Got good product.
There you go. All right, I think that'll do with enough ranting and raging there and bore people to death. So thanks, Phil. We'll be back next week.
Yeah, we will. Okay. Cheers, Andrew.